Let's take a look at some charts on Cardano from this week's article on Brave New Coin. So Cardano is a staking coin that uses proof of stake. Proof of stake is not analogous for decentralized, and I'll make that more clear in a second. But all of these coins, just because they're proof of stake, doesn't mean they have increased decentralization compared to proof of work coins. They just choose a different consensus mechanism, which also has its weaknesses, as do proof of work coins. ETH is not on this list because, in my mind, it's not actually a true proof of stake coin yet, because their consensus mechanism is based on proof of work. You may be able to accrue rewards in a proof of stake type way through a separate chain or side chain or beacon chain, however you want to think of it, on ETH right now, but it's not truly a coin that uses consensus, staking consensus. I mean, you can say the same thing for ZRX. It's not used for consensus. It does have a staking mechanism. Nevertheless, it's on here because it's my chart, right? So looking at market cap and daily transaction volume and total fees, Cardano leads its peers, and it also leads in get commits, depending on how you want to count those. Now, Tron is off this fee list because it doesn't have fees. Tron is off transactions per day because it doesn't have fees, which means it has millions of transactions per day, which is way more than any of these other coins. And it's really unfair to even look at the two together. Now, Tron's active addresses are here because of Tether on Tron. I think it's important to just keep a gauge. You know, realistically, this is an outlier and shouldn't be on here, but it is what it is. If we look at ADA and active addresses, it's towards the upper half, certainly, below Dash, but really second amongst the other proof of stake coins. And transactions per day, it's behind Tezos and Dash. I think Tezos transactions per day is largely because of staking. Dash has high active addresses and transactions per day because of the on-chain mixing. So all these have caveats as far as why they are where they are. And to me, Cardano just has a lot of coins. So you're going to see a lot of volume based on just mass, really. Just mass based on total coins. I really don't see any one of these as like more economic than the other as far as on-chain utility, because you can't just look at the numbers and say, okay, you know, the market cap is this. Why is the market cap this? Well, could be because there's so many extra coins compared to other chains. And if there's more coins, then everything just shoots way up, right? Except transactions per day and daily active addresses, which to me are a true measure of on-chain utility relative to everything else. Now, much like Ethereum currently, Cardano underwent a proof of stake transition, because previously the network was 100% centralized, and we can have an argument about that, but I will win, because the rewards were decided based on IOHK, Cardano people. The network was completely under specific consensus based on IOHK and Cardano, so everything was completely centralized up until Shelley hard fork, and this was last year in July, August. And even they themselves have put out this great graphic for people who aren't sure. They're nailing their own coffin here. Everything was fully centralized. All blocks were produced by core nodes, which were under control of IOHK. Now this will slowly transition. They're probably somewhere in between most blocks produced by core nodes and most blocks produced by, majority of blocks produced by core nodes. So they're in this transition right now. It's trying to transition into a state of increased decentralization. They're well on their way. You know, they have a lot of stuff to do in the background, rewriting software, rewriting some of the code for the chain, blah, 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 blah. They'll get there, maybe. But right now, still more centralized than most people realize, probably. If we look at staking across all assets, again, Cardano leads actually now everything else. To me, why? Because there's more coins than anywhere else. Relative to some of these other projects, some of these projects are super new, some of them are inflated. You know, this is, even has ETH on here. But right now, Cardano rules the roost as far as total notional value being staked. And it's at 60 to 70%. Surprised it's not more, because I don't think there's much else you can do with Cardano. It's the Tezos problem. When there's not anything to do with it other than earn interest in the stake, that's where you're going to see most of the volume go towards. If you look at ETH, ETH has DeFi. Some of these other chains have DeFi. So you're going to see a mixture of yield strategies based on what you can actually do with the coin. If you look at the total transactions per day, per week in this case, on Cardano, it's hitting all-time highs. which is incredibly bullish for any chain in a vacuum. So my own personal bearishness on the chain should be separate from what I think this looks like right now. If I'm truly being objective here, this is insanely bullish. You're seeing more activity than you ever have on chain for Cardano. Much of this is sort of the proof of stake transition. You can't really look at these two worlds the same, pre and post proof of stake. So with proof of stake, you just generally see more on-chain activity because that's what people are doing with the coin. If there's DeFi, you're seeing more activity in the DeFi. If there's dApps, games, you're going to see activity there. But nonetheless, you're going to see an increase in activity on-chain. Mean transaction sizes have risen, but are not near mid-2020 levels, mainly because of proof of stake transition. Again, all this stuff is sort of with a caveat because the network is different now than it was previously. So it's important to keep that in mind. Yeah, yes, this is bullish, but when you look at under the hood and you're like, oh, okay, we've switched from proof of nothing to proof of stake. It's a little bit different. Active address is also at an all-time high, no surprise there. Much like Tezos, that network has continued to push active address all-time highs to me because of staking. So I expect Cardano to continue to push active address all-time highs. NVT has been all over the place, but really what I'm looking at is this 30 level as far as a floor, the theoretical floor. These other values were heavily influenced by chain movements relative to proof of stake transitions. So you're going to see a dip there, much like you saw a dip with Stellar when they moved half the chain at once. I mean, that's going to impact values like this tremendously. So NVT, hard to pay attention to ever, really, but especially when stuff like that happens, because now it's sort of equilibrating, hitting a new equilibrium with the proof of stake transition. Looking at Google Trends, they're ready to break out beyond 2-year highs, as is the case with most high cap coins right now. Anything that was around since 2017, we're starting to see searches on those coins approach similar levels to the previous bubble in late 2017, early 2018. So there's no doubt in my mind this will continue. This should probably exceed last bubble just because we have more participants. If you look at Ethereum's Google Trends have exceeded its all-time high in price. So this isn't really a surprise. And here's just zoomed in on that 2-year time frame. And you can see it's higher than in any period of the past 2 years. So I'd expect to some degree price to be higher than it has been at any point in the past 2 years. That's in USD, not in BTC. Another important distinction to make for ETH. As bullish as some of these high cap coins look, as close as they are to some of their all-time highs, they're nowhere near their BTC all-time highs relative to BTC. If we look at the USD pair, pop on some technicals. We have volume, VPVR, yearly pivots, and RSI, as well as 50, 200 EMAs. So like most other coins, the 50 and the 200 EMAs went bearish and then bullish again from March to mid-year. Since then, most coins on the USD pairs have been holding above their 200-day moving average. Cardano is no different. And it's quickly approaching its 2-year highs, established maybe April 2018. So that should easily be broken in the near term, is my guess. I like 45 cents, I like 50 cents, I like 55 cents. Any of these yearly pivots, any obvious psychological resistance. Trend metrics certainly bullish. Obviously no big VPVR resistances, volume levels on the way up, just because price wasn't really there for that long. No bullish or bearish divergence currently. As far as downside support, I'd always be looking at the 50 and the 200 EMAs, as well as the yearly pivot around 15 cents, something like that. Here's the daily cloud. Again, you got that bullish Kumo breakout mid-November, paving the way for future bullish action. You get several Kijun bounces on the daily, so as flat as this looked leading into December, once new highs were established, that was all she wrote as far as the trend is concerned in a bullish fashion. Currently, Kijun support sits around 25 cents, again, a psychological level. It's really, most of the time this stuff respects levels it should on USD pairs, 25 cents, 50 cents, $1, that sort of thing. It's no secret. And the math is telling you, based on the cloud, that 25 cents is currently the support for the daily. Lastly, looking at Cardano BTC, a bit of a whirlwind tour over the past few years. In late 2018, leading into 2019, You had this really great technical inverted head and shoulders pattern with a bullish Kumo breakout, broke above the 200-day moving average. No surprise that exploded. All of that got sold off, and a massive bearish trend ensued, followed by 10 to 12 months of sideways consolidation. Once again, you get this break above the daily cloud and the 200-day moving average in mid-2020. All that explodes with the proof of stake story transition, and now we're left in a deep bear market as all that's been sold off. Now we're below the 200 again, we're below the daily again. There's some sort of descending broadening wedge here or something. It's not an inverted head and shoulders because you're not getting a higher low here, you're getting a lower low. So I'd definitely be looking at 900 sats if I was trying to be bullish. The cloud is currently trying to twist green at around 750 sats. So if this can hold at this level for the next few weeks, there's certainly the possibility of a run beyond 900 sats. But where this sits here, it's hard to be bullish on anything that's below its 200-day moving average, anything that's below its daily cloud, regardless of the volume, which made a multi-month high here on Binance. If I was bearish, I wouldn't expect anything below 450 sats. Anything below this consolidation period would indicate mega bearish territory, or just mega bullish BTC relative to Cardano. No bull or bear dips here at all either. Yeah, it's just, to me, it's just sideways, not exciting at the moment. So Cardano's in a bit of a transition period. It looks better than many proof of stake coins that have been proof of stake for quite some time. Cardano's still in a transition period between being completely 100% centralized to being half and half centralized and decentralized, and that transition will continue over time. Google Trends look the best they've looked in 2 years. Transactions per day and active addresses on chain activity looks great, but at the same time, much of that is probably related to the proof of stake transition and how the network is functioning now versus when it did before. And technicals for the USD pair look incredibly bullish. Technicals for the BTC pair look neutral to bearish.